Today we'll be discussing inventory cost. Inventory is the product that the store purchases, for example food or clothes, which they resell at a later. There are two types of inventory systems that are used to calculate the cost of goods sold. First is the perpetual system, where the inventory is updated each time the inventory is sold. Then there is the periodic system, where the cost of goods sold is calculated at the end of the time period. Today we'll be focusing on the perpetual system. Costing methods. First in, first out, last in, last out, moving averages, and specific identification. We'll be focusing on moving averages. To calculate the cost of goods sold based on the average unit of cost. To determine the average unit cost, you divide the goods available for sale over the units available for sale. This will make more. Average is as follows: date, transaction, inventory purchased, inventory sold, and inventory on hand. Amount purchased is the number of units that you, in this case, have bought. Cost of goods is the individual price of a single unit. The total is the amount purchased plus the cost of goods. Where to start? First, you catalogue your beginning inventory under inventory on hand, as you already have this in stock. Then you put down your inventory purchase. The next step is to move purchase number 1 into inventory on hand, as this will make the following equations easier. You add the units in the beginning inventory and in the purchase, as well as the totals. In this example, we have sold 65 units. First, we must determine the average cost. For this, we take the total, $1,260, and divide it by the total number of units we have, which is 100. This gives us $12.60. To get the 65 units, we take the 60 we purchased earlier, then using the 40 units we had at the beginning, we take away the 5 that are left over. This gives us 35 units on hand. The $12.60 gets transferred over to the cost of goods sold, the inventory on hand section. This is then repeated till the end of the time period. Helps you in understanding of inventory costing and moving averages. Thanks for watching.